Good afternoon, traders and investors. Hope you guys are doing well. It was a beautiful sunny day today. A decent day in the markets, guys. If you were exposed to technology, and if you were not, probably not that great of a day for you, which is highly understandable. And we're going to actually get into that. So once again, technology leading the markets with semiconductors as well. Bit of profit taking into the end of the day on some of our high flying names here. And today we're going to do some broad market analysis, get into the big names pretty much, and do a little bit of trade potential reviews here for the trades for the week. So let's get into some charts. So what I wanted to show you guys here is it's very funny. We're going to continue this pattern here of basically the market is being held up by only a few names, and I'm going to show you guys how bad it's actually getting, right? So if you're in anything other than big tech or semiconductors and you feel that over the past month you haven't been getting any gains, you are not alone, my friends. So now let's take a look at the heat map for today. So SPY, as you can see, barely edging out a profit on the day, while QQQ putting in another roughly 0.5% day with some profit taking into the end of the day here. Perfectly normal. We did have a gap up open, and it's pretty much been nothing but up in the past 4 trading sessions. Getting a bit lofty here, guys, on the RSI on our daily QQQs. The heat map, as you can see, if I move kind of to the side, here, right, a bit, you can see that once again, most of our major sectors did not perform well at all. So as you can see, once again, we are being upheld by only a few names. Microsoft, Google, Meta, right, are not that red on the day. However, Apple's making up for Microsoft and pretty much, you could argue a bit of Google at this point, right? You had NVDA with a nice 3% day, Amazon with a big bullish day here, making up for the rest of the negative move on Google, and Tesla up here with about 4.14%. Beautiful day on Tesla. Very happy about that one in my portfolio. And congratulations to any other Tesla bulls that have been holding on for dear life for the past 2 months. But as you can see, the rest of our stock market here has not been performing very well at all. So let's take a look here at some of our year-to-date gains on some of the major indexes to show you guys how bad this is actually getting, right? So if you want to see here, breaking down by stock. So this is all 500 stocks in the S&P 500. And if you look at the top gainers for the year, you'll notice that they're most of our larger components in the index. Let's take a look, right? NVIDIA's right up here, Meta, AMD, Salesforce with a very good performance as well. But as you can see, right, Tesla down here at number 7. If we go down a bit further, you'll find your Amazons, your Alphabet, Googles here with around 40% plus. You'll also come down a bit more. Microsoft, right, 38%. Apple up here, 35%. So all of our big tech names here that represents the largest weights here all have the largest gains on the year. Netflix, you can see as well. And if we just scroll down here for purpose of example, you will see that 235 names are up, which means that the balance, 265 names, are indeed red. So we have fewer names that are actually up on the year, right, than names that are down. So more names that are down on the year. If we look at another metric here, which is the S&P 500, XAIT, so S&P 500 without our technology sector, what do we see here? On the year to date, we are actually only up 1.45%. If you compare this to the actual S&P 500, you'll see that year to date, it is up roughly around 10%. So technology is largely responsible, right? Only have about 1.45% if you remove technology. But if you include technology in the S&P 500, it represents the other 90% of our 10%, right? So around 1.5 versus 10, roughly around 85% of the missing gains are from our technology sector. So very important here, guys. If you look at the RSP, which is your equal weighted S&P 500, you will see that we're actually down year to date. Okay, so equal weighted S&P 500, very important, which is why you see the lag. If I pull up my S&P 500 chart here on the daily, you'll see that this chart, right, the normal SPY, is a lot different from our equal weighted SPY chart, which does not look very bullish at all. So this is something that I've been keeping an eye on. And as you can see, guys, if you look at the Dow Jones, right, Dow Jones as well, year to date, we are actually negative on the Dow Jones, which which is more of a value index, a lot of industrial names in there, a lot of value names, Procter & Gamble, anything from Procter & Gamble, Home Depot, Caterpillar, Coca-Cola, stuff like that, right? And we'll go into that, but it's very notable to me when you compare the Dow Jones, right, versus something like QQQ, which year to date is up 32%. That is a very wide discrepancy. You can argue purchasing power. You can argue the adoption of AI and businesses in big tech reinvesting a lot of their profits into AI and increasing guidance and earnings estimates for the next 2 years because of their implementation of AI. But that doesn't take away from the fact that this is a very big discrepancy when we look between value and straight up technology growth, right? So keep that in mind, guys. If you are down potentially in your portfolios, you are not alone, okay? Don't think that it's something that you're doing wrong. A lot of our value names here have been pulling back as people plow their money into what they consider at this point to be the risk-free trade for them, right? Apple and Microsoft going into this potential recession does not present as much risk for investors than your traditional value names, which consumers could potentially stop purchasing altogether or move to cheaper, different alternatives. So apparently tech's moat is actually paying off in the fact that, you know, they are viewed as more safe haven trades, despite the fact that they are in the riskiest segment of the economy. It's kind of counterintuitive, but that's how the narrative has been playing out. So getting into the charts themselves, right? SPY on the day, as you can see, opened up really well in the morning, right? 9, and then kind of dumped off for the better part of the morning before recovering late afternoon and then kind of fizzling off here. So what we're actually doing here, guys, is the famous breakout retest, right? So we have a breakout from our most recent highs, and now we are retesting our previous resistance level, which is now acting as support. So as long as the bulls can hold this 4-hour trend in a nice fashion, potentially hold the MA and hold our relative support zone, which I've kind of identified here with this yellow zone, as long as we can hold this support zone, right, bulls are going to remain in full control on SPY. Now, that doesn't mean that QQQ needs to keep on carrying us. I've been saying this for weeks, guys. We need support from our financial sector and from healthcare if we want to have a chance of SPY really getting away from this zone and start to head towards our future zone here, which is roughly around the 430 target, our future resistance point, right? So on the weekly, still looking very bullish on the weekly, kind of just grinding higher here. It is a weekly uptrend. It is as well a daily uptrend, but we absolutely need to hold, in my opinion, this breakout retest formation, and we need to get some broad market participation in this market with now the deal of the debt ceiling on the table, and potentially with the fact that people are coming to terms with the fact that inflation won't be that sticky, and the Federal Reserve is nearing their terminal rates pretty much, right? We can now argue that there are now less and less negative catalysts on the table to keep this market down. So that is very important to keep in mind. If we run out of negative catalysts here over the next few months, it's very possible that this market just continues to grind higher. I'm not expecting it to move higher in leaps and bounds, but I have been bullish on this market pretty much since December. I do believe that October and December have been the respective bottoms, depending on which your stock you are looking at, especially if it's a profitable legacy company. So keeping that in mind, I do believe that this recovery will continue further. Potentially it will get volatile and whatnot, but as long as the bulls can remain in full control here on SPY of the weekly and daily timeframes, I will remain bullish. It's just that I'm getting cautiously bullish because we don't have broad market participation. All right. Now, moving into technology, as you can see, technology now a bit, in my opinion, overextended here on the RSI. Would not be surprised if we do get some pullback, especially after Friday's ridiculous session before the long weekend, right? Which is why we did see a lot of profit taking today on some of our larger names, especially NVIDIA, which we will look at. For me, line in the sand area at this point remains kind of my previous resistance, which will now be acting as support roughly around 338, right? However, the bulls have created so much space that anything, in my opinion, above this line here will continue to be very bullish. But the line in the sand level for me is continuing to be this 330.5 in terms of if bulls want to remain in a solid uptrend, they absolutely need to hold that level. As a matter of fact, if it would pull back all the way down here, it would not look very bullish at all, despite that being the level, which is why I need them to hold the 338 for this chart to relatively remain bullish in my view. As you can see, a pullback to here would be coincidental here with our previous resistance area that's now support, you know, and we can probably get some decent recovery here if we do make only a shallow bounce. You don't want them to pull too deep, but bulls do control the weekly time frame at this point. On the weekly, there's even more space, right? 325 roughly would be the line in the sand area for me to conserve the weekly uptrend here. But for me, on the bull side, it's all about the daily time frame. Need to know what they're going to do if we potentially lose the 4-hour trend. How far down will we consolidate? But as of now, bulls are in absolute full control of the weekly, daily, and even 4-hour. At this point, we're just looking for a higher low, potentially somewhat closer to this moving average. Wouldn't be opposed to seeing that. So upside resistance levels remain now at this point. I mean, guys, we're pushing so high here in the mid 360s. 360, this would be your supply area, right? So just keep that in mind. And I've given you the downside levels. Now, what we need participation from this guy, XLF, and from healthcare. Let's look into XLF first. So bulls doing a good job of holding on to this tightening range. That's exactly what we want to see. You do not want to see us flush the 31.5 roughly lows here down in this area, right? We absolutely need to control this zone. So the time frame for me at this point, the line in the sand on the weekly, you know, guys, for me, if you want to maintain this tightening range to be healthy, it's really above 31.67, okay? This line right here is the line that I need to see bulls hold, because if we break down below that, it will kind of be a confirmed weekly downtrend at that point, which is not what you want to see. You really want to see them maintain this tightening range, right? And not really cut the lows by too much. So this level for me is the level to watch on the daily. I'll show you why. That looks something like this, right? Every time we've tried to get below this since the beginning of May, we've gotten rejected. Other than one day where we gapped instantly back up thereafter, we have held this range. So that's what I'm looking for, guys. I'm looking for bulls to put in some good work so that the next result here, if we do get a further bounce, I need them to set a higher low compared to our low down here and then start a new daily uptrend. That's what I've been looking for. We absolutely need participation from the bulls. So the upside target for me will remain just under $33 here, and the downside target remains 31.69. If we do break below this level, I will be looking to write some options potentially in the low 30 zone, because I do believe that financials have gotten pretty much unfairly hit ever since the banking crisis, regional banking crisis, which has led into some of the larger cap banking names. And I do believe at this point, you do have some really good opportunities, especially in names like American Express, which is relatively near the lows. You'll see my optimal zone here is right around 146 for that. We did have some nice dips over the last 2 weeks in Visa, as you can see, coming down here right there, and MasterCard as well. Oops, excuse me, that's the wrong thing. If we go to MasterCard as well, you'll do see that we have had some good consolidation here on MasterCard too. So I really like the payment processors in terms of the dips that I'm seeing. And you guys know my favorite play in the financials right now is Charles Schwab. I'm expecting at this point that the most likely scenario after any further consolidation will be a weekly higher low compared to our low of 46.5. And I'm looking to play if we do get a low here, or at any point in time when the bulls are done, right? I'm looking to play the higher low. And that's when I'll be loading up here potentially on some leap call options, potentially through 2025, because I do believe that there's some very good recovery value in this stock particularly. So, but XLF, those are levels that I'm watching. Bulls, in my opinion, absolutely need to hold these levels. XLV. So healthcare, what a disappointment. This is a weekly bull flag, was a weekly bull flag, now turned into some form of tightening range potentially, right? The bears have taken back way too much of this bullish move. In my opinion, it's very unfortunate at this point. Now we've taken back almost 78% of the upswing up, which is not what you want to see at all. The best case scenario at this point is bulls step in soon. If not, our support really comes down here at the previous lows, which is around right under $124. You do not want to see them lose that low. So what I'll be looking for here is daily time frame exhaustion. As you can see, we are getting fairly oversold. Oops, let me move that over for you guys. We are getting fairly oversold now at this point on XLV. Keep in mind that this is a boomer sector. It does not go daily oversold that deep, not as much as tech does, right? Except if you're looking for some COVID lows, right? So it does not traditionally go that deep, right? RSI is now trading at roughly, let me pull it up here, just under, let's call it 29. Usually at these bottoms, right, it gets down to 25, 26, 27. So keeping an eye out for that, guys. If it does continue to push lower, I do believe that this whole support zone will provide some relief, and that may be the catalyst for the RSI bottoming out, but not looking good, guys. You do not want to see this, especially when we're looking for bulls here to come in as support for SPY, right? Not only SPY really needs to have broad market participation. We need to get XLF financials and we need to get healthcare involved in a larger fashion if you want to see SPY push up as much as QQQ has been pushing up. And so far, unfortunately, the bulls have just dropped the ball on this chart. It was a beautiful, beautiful, beautiful weekly bull flag. And now, unfortunately, with last week's disastrous week for healthcare, we've now pushed back. And the best you can expect for at this point will be the continuation of a tightening range. But I really don't like this pattern because when this pattern plays out, sometimes it takes a long time to play out. And you can see if it does follow my line here, which I don't think is too aggressive, we would put us back in August before this range tightens up. Now, obviously, I'm not going to forecast that far. Nobody knows how markets are going to be, especially not that far out, right? But I'm just saying that you would usually expect some form of a tightening range pattern when you do see bulls cut down this low. So line in the sand level is, for me, just under 124. And as I said, guys, just expect daily exhaustion at this point, right? You need to wait for the 4-hour bulls to show their faces to set potentially a new trend change to the upside. Unless if they don't pull that right, they're coming right down to this area, and we're going to kind of have to soften up before you see the bulls make a stab at the trend reversal. So very, very unfortunate for healthcare. I would be writing options down here in healthcare. I would not mind if we keep pulling down, writing options anywhere between the 125 and 122 range. Russell, well, the Russell, unfortunately, doing absolutely nothing, as it has been doing pretty much for the last 2 months at this point, right? So what we're trying to do on the Russell, we have been trying to set a daily higher low for a potential new daily uptrend. The problem is the bears cut way too far into this daily bull move. So this is why at this moment, right, we're having a hard time. This kind of looks like XLV, right? When the bears cut too much into a move, what you have to expect at that point is a tightening range, accumulation to give them enough tightness that they can break the range either one way or the other and give us more clarity. That's why I like these moves to tighten up, but I don't like them because sometimes they take a bit extra time to play out. Now, what I'm looking for on the Russell here, I'm looking for us to hold the 172.75 low, which is the low right here, right? This whole area right here is a very, very, very important area. In my opinion, you need to hold this area. If we come below, you guys know if you've watched the channel in the past, I will be writing options in this area because I do believe that this is a great area for growth names and for some regional banks, right? Now that a lot of fear is put behind us, this could be a very, very good bounce zone. It's acted as a bounce zone in the past, which is why I like it a lot. I don't believe that there is enough negative catalysts to push the Russell further and further below that, right? Anything below that would be another 10% move to the downside, which at this point, unless we get some severe market consolidation, especially in technology, would be, you'd be hard pressed to see a big move down on the Russell like that. So expecting that, we need to hold this range, absolutely. Level to the upside to watch is still, this is kind of just a blow off top here. I would put it more at 179, anywhere 179.5 to 180. This whole range up here is going to be your target range to the upside. But as of now, Russell completely muted. You need to see the bulls put in some work. If we are going to tighten up, you need to see them change the trend to the upside, right? The daily time frame is going to be the one for me. Dow Jones looking exactly like healthcare did before it kind of dropped, right? So if I pull up this chart, and you take healthcare before this drop, right? That's basically the Dow Jones. Dow Jones holding in there a bit better because it is a broad-based index and not a, consolidated view of only healthcare. So as of now, still a weekly bull flag in my opinion. However, we are getting to the level of contention here, the 50% fib, right? You need to see bulls hold this 50% fib if you want our value names to bounce back, right? There's a lot of value names that have taken nasty hits over the past couple weeks. Target, Nike, just to name a few. So the bulls need to hold at this point, like I was saying in my previous video, right? Need to hold this 50% fib, which would be around 32,825, right? So absolutely need to hold this level for me if you want the most likely scenario to be a bullish upswing. If we pull down too low, we're going to have to end up potentially doing some of this accumulation range, right? Tightening range pattern formation, which is, like I was saying before, not my favorite pattern because of how long it takes, but at least it provides a bit more clarity once you do get that break, right? So weekly bull flag, we are trading below our moving averages. What I want to see, if technology does take a breather, I need to see our value names pull up and uphold this market, because only one of two things is going to happen, guys. Either tech is going to come down and it's going to pull the rest of the market with it, or tech is going to come down and investors are going to rotate into the value plays that have been kept down for a few months now at this point, and we're going to have some healthy rotation. I personally think that it will be the healthy rotation scenario, because if we were to get a value name drop and a technology drop, that would be money leaving the market. And I don't think that money has reason to leave the market at this point, which is why I'm favoring the rotation narrative. What you need to see is bulls from this bounce need to put in enough space so that the most likely scenario then becomes a higher low compared to our low here right now. And we need to see a daily uptrend. Until I see this daily uptrend formation, I cannot say that a weekly uptrend is significantly in motion. So we absolutely need a daily uptrend to be confirmed for me to be looking higher at the weekly, for me to say, okay, a weekly push is underway. All right. Now, looking at Bitcoin. The reason I'm laughing, guys, I apologize, is just because, Bitcoin is a risk on asset. And when you see Bitcoin and compare it to QQQ, right? This is a risk asset, right? The risk asset is moving on QQQ. All of our risky technology names are pushing higher and higher and higher. And unfortunately, sadly, our crypto names are doing absolutely nothing, guys. So if you didn't know, we're really having trouble with volume in Bitcoin. There was an article put out over the weekend that Bitcoin volumes are actually at the lowest point of the entire year at this point, which is not what you want to see when QQQ continues to push 52-week highs. So Bitcoin has been muted. However, there is a positive turnaround for the bulls that did occur this most recent weekend, right? Which is rare. Usually crypto hasn't moved a lot on the weekends. What did we do? We have potentially reversed the daily trend. We've been waiting for this, guys, ever since this drop happened early May, right? We've been waiting for the daily trend change. Bears have gotten sufficiently exhausted to where they tried to make a push down, failed to follow through, and now we've broken higher. Now, if we can come down and sit on this level of support, previous resistance, which is now support, confluence, right? We have confluence, the moving averages, and we have horizontal support. So bulls, in my opinion, absolutely need to hold this level, which is roughly 27.4, 27.5, okay? So that the most likely scenario does become a further upswing and a confirmation of a daily uptrend. It is not yet a confirmed daily uptrend. This is just a daily upswing. What you need to do is set a higher low compared to your low, previous low, right around 25,800. Need to set the higher low, and then you need to crack the highs. Only then will you have a confirmed daily uptrend, which can have you looking higher at the weekly for potentially calling some of these 30,000 levels, right? First things first, need to set the daily higher low. So I'm going to be looking out for bulls to do that. How do you know that it's done? Well, all you need to look at this point is the 4-hour trend. As soon as our 4-hour bulls confirm a new 4-hour uptrend, because now we're just consolidating, tightening around. Soon as they confirm a 4-hour uptrend, you can say that most likely the daily higher low is set. Now, looking into a few names, I really want to get a few names, then we'll look into some trades, all right? So Apple, blow off top today. Suffice it to say, it can be looked at as a blow off top. What did we have today? Gap up into the high of the day and then end in a doji candle. Not the only name, that ended like that. NVIDIA, blow off top, right? You don't want to see this type of candle after a gap up open, close at the low of the day, and setting a doji formation like that. Apple held up a bit better than NVIDIA, but we are still in a daily uptrend, right? So higher highs, right? This was kind of an equal low, but higher highs. Bulls are in full control. We have a slight gap from today to fill, okay? So at this point, I'm still saying that the bulls are in full control, but don't forget, we are approaching, right, weekly overbought conditions. And as you've seen in the past, sometimes Apple doesn't appreciate weekly overbought conditions. It can stay overbought for a while, as you can see, and continue to push higher, but eventually we will have to set some form of weekly higher low because this has pretty much been one gigantic move to the upside. Line in the sand level for me for the weekly bulls will be 170 pretty much 171 right here on the dot. If you can see on the daily, that's pretty much the exact same level, right? So bulls need to hold this level. What you want to see if you're continuing to be bullish on Apple is bulls set a daily higher low and continue kind of to grind higher. But line in the sand level for me remains at 171. If you lose 171, not only do you lose the daily uptrend, but you could potentially also set up for a weekly downtrend, all right? And you would not want to see that. So really need to hold this and not close below it too high. So that's the level to the downside. Level to the upside at this point remains our 180 resistance, right? Our level right up here. We've touched it before, right? Last week, or actually today, as a matter of fact, we barely got through the 179 before pulling back further. So 180 psychological will be the area of resistance, and line in the sand level for me down here, 171 on Apple. Let's go to Amazon next. Amazon, all right? Amazon holding up a bit better, but also in the same kind of, overbought conditions here, right? So if we look on the weekly is still looking good. A lot of space still before we are overbought. However, we are trading fairly away from our moving averages here. Amazon, next resistance levels for Amazon at this point become the 125, fairly thin up here. The bigger one that I want to see right here, guys, being tested is our 133, 134 supply zone, right? I need to see the bulls pull up into this area high, potentially pull up into this area hard, get rejected, and set a nice weekly higher low off of that rejected before potentially moving up higher, right? So at this point, the daily trend is my guide. Daily bulls are in full control. Line in the sand level for me remains around 114. Let's call it 114 and a half right here. So you need to see bulls. What I want to see is bulls come down potentially if we do consolidate this week. Come down, set a daily higher low, and continue to push higher. But keep in mind, we are slightly getting towards the overbought levels on the daily with some decent space on the weekly. So Amazon, in my opinion, looking fairly healthy, right? 4-hour bulls, full control at this point. Weekly bulls, full control. Daily bulls, full control. So in my opinion, Amazon still looking to potentially move higher here, right? Bigger things at play here, guys. Bigger things at play. Don't forget, Amazon is still down a whopping 35% from all-time highs. Granted, they don't have the same financials as they did back here. However, still looking fairly good on Amazon, is relatively undervalued compared to if you're looking at what the other tech plays have done on the year. Now, Google also looking fairly good, right? We are kind of curling off here on the weekly RSI. However, if we zoom into the daily, you'll see that we are just consolidating here at the higher levels, allowing for the RSI on the daily to cool off a little bit. So the line in the sand level for me on Google at this point does stand currently at 120.74. You can see I have this zone here, right? So this whole zone here, that is really my area. If we break below here, then we look out for potentially a daily downtrend, which is why I'm looking for the zone between 122.5 and 120 flat. So need to maintain this area. It was a very, very crucial area of resistance in the past. So I'm looking for it to act as support. If we do pull back on the daily a bit more, this is just going to be setting up for a potential weekly higher low compared to our low down here of 105. So much space for the bulls, which is why Google is one of my favorite names potentially. If it does pull back, I will gladly start writing options right in this little pocket down here. I don't believe that we would pull back that much. If we do pull back that much, I do think that we get bought up fairly well, which is why I don't mind playing options down here. Okay, so that's pretty much it for Google. And level to the upside, what I'm looking for here is I'm looking for, if we do get a nice pullback into here, well, the next area of contention for me will be this massive supply zone here, anywhere between 135 and 140. Difficult to call one single price since it did drop very, very, very hard from here, breaking through most of our zones. Now, Microsoft. Okay, so Microsoft is looking fairly decent in terms of for the bulls, right? However, I do stress, which is what I was stressing last week, is we've pulled significantly off our moving averages here, right? We are weekly overbought. Now, these can stay overbought for a while, but when it becomes that you're weekly overbought, daily overbought, sometimes it does warrant a slight pullback. As you can see, guys, this move here, pretty much Thursday and Friday, was an enormous move, right? This was a almost 7% move, low to high, right? So it's created a lot of space for the bulls that the most likely scenario becomes a daily higher low. So looking for a daily higher low, line in the sand level for me, 313. Bulls cannot lose this area, or you run the risk of losing the daily uptrend. On the weekly for me, it is a bit lower. You have so much space on the weekly. 307 is the level for me that you could afford as a weekly pullback and still be in a good enough setup to at least hold these higher levels. So keep that in mind for Microsoft to the downside. And to the upside, we're basically looking at all-time highs, right? So we're looking at anywhere between 342-ish all the way up to 350 pretty much as your resistance area for Microsoft. Very, very bullish. Bulls are in full control. Entirely up to the bears here to prove it to us if they want to reverse, right? The worst that can happen is the bulls pull back too deep into this move, set up the chance for a daily high, lower high, and then move into a daily downtrend, at which point we would be looking for weekly consolidation. So all about the daily uptrends at this point, guys, on most of these names. NVIDIA, well, NVIDIA, you basically had somewhat of a profit-taking candle up here at all-time highs, right? I'm not even going to talk about how overbought the weekly RSI is. Pretty much the most overbought in this stock's recent history, right? It does get up to this level some other times, right? July 2016 and obviously the November 2021 move. But this is usually where NVIDIA kind of starts to taper off. Now, the benefit is we've created so much space that any move to the downside will just be a weekly higher low compared to our recent low here of 281, right? So ridiculous amount of space. But, you know, once again, just like all of our other major tech, now the proof, the chart to look out for, guys, is the daily chart, right? If we pull back too much, it leaves the space for the bulls to potentially set a lower high and roll over, right? Which would mean a potential for a daily downtrend. So once the daily downtrend is in motion, you're then looking for weekly consolidation. But, you know, line in the sand level for me, anything above 376 at this point will just be your weekly, well, it's kind of ugly, right? So if we zoom into the 4 hour, right? So anything above, let's call it 375 here, will be for me a daily higher low at this point for the bulls. Anything below, you know, potentially sets you up for a daily downtrend setup here, which is not what you want to see. However, it is due for some consolidation, right? Weekly is overbought, heavily overbought. Daily is overbought, but bulls are in full control until they do prove that pattern to us. The bulls are in absolute full control of this chart. We're in blue sky breakout territory right now, as they say. So very, very tough when you're in price discovery mode. For me personally, if I was looking to short this, I would be waiting for the lower high to be set and curling below. I would try to enter, you know, as close here on the lower time frames. And once we see the hourly roll over and setting setting my stop losses above the high here, if I wanted to take a short on this. Personally, that's how I trade. Always wait for confirmation. Meta as well, right? So profit taking candle into the end of the day. A lot of these candles look the same, right? Red doji candle at the end of the day. So what are we looking for? Potentially some room for some weekly consolidation here. You guys can see the level that's there for me on Meta. The level for me on Meta, roughly 245-ish here, you know, right at the lows of these candles here. we've created so much space on the daily that anything above will just be a daily higher low. Now, you don't want the bulls to pull back, just as all the other charts, you don't want the bulls to pull back too much, or you set up the chance for a potential daily downtrend. One thing at a time though, keep in mind guys, we are just looking at this point for a daily higher low. So give the bulls a chance. They've showed up in the past, so no reason that they wouldn't show up again. So you're always looking out for your 4 hour. When does the 4 hour downtrend stop? That's when you'll be able to judge that your daily higher low has been set on Meta. So level to the downside right here to watch out for is that 245 area line in the sand. And towards the upside, we are in gap fill territory at this point. So the next level for me becomes 292 all the way up to 300. This zone here, right? The end of our potential gap. Now, Tesla, congratulations to everybody that's held Tesla from the bottom range here that I had put on my chart now for the past month. It was a rough hold, but I can't say that I was nervous on any, standpoint, because Tesla, I don't have to talk about it this video, guys, but you guys already know what Tesla is doing. They have so many different product segments that they could potentially attack with AI and robotics in the future. Their production capacity, right? They have production alpha. They're actually one of the leanest producers in the entire car making space at this point. They're doing 2 new product launches over the next year, which Elon hinted at. They'll be starting advertising. So a lot of renewed interest, in Tesla stock, which is what has basically catapulted us off of our lows here back in mid-May from 165 all the way up to, let me just see here, how much of a percentage move is this? This is roughly to the high of the day today, 23, almost 24% move. Very, very nice move for the bulls. Gap up open today. End of the day, bit of profit taking, but as you can see, we did hold up the 4 hour trend beautifully, consolidating at the highs here. So Tesla, at this point, very, very satisfied in Tesla. Now, the bulls have created enough space off the low that I'm expecting any weekly pullback at this point to be a weekly higher low for a weekly confirmed uptrend. Thank the Lord for the first time in a while. So looking out for that, I'm staying optimistic, guys, on this. Daily bulls are in full control, right? Any daily pullback will just be for a higher low. Line in the sand level for me remains 180. So anything above 180 will be a higher low. Looking for them to do it right above this level right here, right? Our previous little support previous support zone, right? If you pull it back all the way to here, previous support becomes new resistance. So I'm kind of looking for them to do it here. And if they do it here, this is how I do my levels, guys. If they do it here, that would probably represent, just over 50% retracement. So still healthy. I do not want to see them give back pretty much below 190 at this point. If I really want to keep this trend for a potential V shape to continue the trend. However, the line in the sand level is the 180 level for me at this point, right? So very, very bullish on Tesla. Congratulations if you were able to hold through. And previous resistance, right? Looking now, anything between, if we want to push up this area, guys, I need to see a break at this point of 210 and start pushing up. At this point, I'll be looking into the above 217, right? If we break 210, I think that we're actually going to 220 and potentially even 230 to come into this whole supply zone here, right? So those are levels to watch out for Tesla for me. Now, I wanted to some notable mentions here. PayPal, which I've been referencing now for a while. PayPal, very, very satisfied what the bulls were able to do today on PayPal. What did we actually do today on PayPal, which we tried to do in the past but failed? We actually set, the potential for an hourly uptrend, right? So engulfed, these sellers moved down and pushed higher on the hourly. We've set us up for a beautiful hourly uptrend. Now, also on the 4 hour time frame, what do we have, guys, at this point? We now have a confirmed 4 hour uptrend, right? So reversed here, came down, set the higher low compared to our previous low, and now we've pushed higher. So higher lows, and at this point, we do have higher highs as well. So love to see it. That is our first confirmed 4 hour uptrend since the drop has happened. Remains to be seen if we can continue to push higher. PayPal hasn't really liked this area here, 62, 62 and a half. So I need to see bulls confirm the push higher tomorrow if we want to see PayPal have some legs. What I want to see is at this point, the daily downtrend get reversed into a new potential daily uptrend. We're doing a good move. We've engulfed excuse me, the most recent move down remains to be seen, right? MACD seems to want to curl over. We're now bouncing out of oversold territory. Weekly was never truly oversold, okay? But it's very possible that we could get a bounce for some mean reversion, potentially targeting the higher moving averages here in the high 60s. But let's not get ahead of ourselves. We need to confirm the 4-hour breakout, right, of this whole, range that they were in, right? So we need to see that. And so I'm going to be looking for continuation of the hourly trend into tomorrow to see if we can continue to push higher on the lower time frames, which could potentially cascade onto the daily push as well and set us up for a potential daily uptrend. It would be much, much appreciated now. Palantir, guys, is getting relatively overextended in my opinion. I was writing covered calls in this area for above for 13.5 and 14 respectively. We're now above my covered call strike area. I mean, I can't complain, guys. This has been a beautiful move. I've been pretty much dollar cost averaging Palantir ever since, $9, $8, $7, $6.50 even was one of my lowest purchases, right? All the way down here in January when people were panicking. So decent company, profitable company at this point too. Rumors of S&P 500 inclusion later in the year. So this is what's been cascading this product higher, as well as the rest of the AI trend, right? So what we're looking out here for, guys, is we're looking for our weekly chart and our daily chart to start topping out here. We're going to look for pullbacks into potentially some daily downtrend motion to eventually set a weekly higher low. The chart, however, is looking extremely bullish still. But if I'm looking for a pullback on Palantir, that would be what I'd be looking for. Now, the proof is on the 4-hour chart. If you want to go bearish on this name, or if you're expecting a pullback here, what you need to see is bulls lose the 4-hour uptrend. They have not lost the 4-hour uptrend this entire time. They've been grinding this 12 EMA. So at this point, if we lose the 12 EMA and pull back significantly enough, then I will be looking potentially that this chart has topped out for the time being. However, keep in mind on the monthly, this is most likely going to be a setup for a monthly higher low eventually and starting a new bullish monthly uptrend. And also this is confirmed that this will be, I highly doubt they give it all back, but eventually this will be a confirmed weekly uptrend as well. Who knows, maybe it gets up here and does this, but at this point you guys get the gist of things, right? The higher time frames are confirming new bullish uptrends. So keep this name on the radar for the next 6 to 12 months. In my opinion, it will be an outperform name. Okay, getting into some quick names. I'm sorry, guys, I need to make these videos shorter, but I just love giving these longer form updates with the levels that I'm looking at type of thing. You know what I mean? So some names that I've actually been looking at, guys, for the week for writing options. Nike has been, in my opinion, absolutely destroyed, right? When have you seen such unrelentless selling on Nike? Unless we were last year when the entire market was dropping, right? So unrelenting selling on Nike, down almost 17% since mid-May pretty much. So over the past 2.5 weeks, filling this gap. Nike puts for me, I want to be writing short puts at the 103 level, right? And if I come into here, am I still logged in, right? This is Vici. All right, let's go back to Nike. So Nike this week is a bit of a shortened week. I apologize for that. But if we're looking here at the 103 strike, you can still find roughly 35 cents as of today. That's what I'd be looking for. If we're looking for around 1 week out, you do get just over, close to about 0.7% for next week on the 103s. Below that, you can go even lower if you want. For next week, as a matter of fact, you would be getting 0.5% at the 101s. 101 would be a very, very juicy area for Nike. In my opinion, as you can see, it's used this level as support in the past, right? And in my opinion, when you do get daily oversold on Nike like this, eventually you do target a bounce, especially when daily conditions are this oversold. 4-hour conditions remain oversold as well. So at this point, I would be a happy shareholder of Nike anywhere in the 100 to 103 area, expecting somewhat of a mean reversion bounce. As you can see, we're getting fairly extended from our weekly moving averages right here. So just playing the bounce on Nike. However, beautiful company, and I would love to own it between those two levels. Another one in the value area, ASO, another stock that has been getting beaten down. It does have earnings this week. I never recommend you guys to play any earnings weeks plays for this company. However, look out after earnings. in my opinion, they will do very well on earnings, but does not mean that the stock price will take it well. But if we look in the past, the stock has always performed very, very well after it has released earnings, because earnings, for the most part, for this company, they keep increasing EPS and guidance ever since this stock has been a publicly traded stock. And so the support zone for me will be between 47 and 42. We'll see what happens after earnings. But if you guys want my personal opinion, I was assigned shares here up here at 52. I do believe it's a good level. I will be DCAing more if we do pull down in this area. Keep in mind, this is a stock that does pay a dividend. It has a market cap of 3.76 billion. It generates per year around 6.4 billion. So it almost has a 2-to-1, almost, not quite, right? So about 1.8 price to sales. If you look at the PE ratio, right? PE ratio of 6.62, guys. I mean, if you want bargain bin deals, this has to be a bargain bin deal. Very, very good company, profitable company, right? Increases EPS, has very, very decent free cash flow as well. So basically, you know, if you want to look at the forecasts here from all our analysts, look at the price targets, minimum, average, and maximum from our analyst expectations here. As you can see, EPS will continue to grow over the foreseeable future and is a strong buy and buy from all of our analysts here. So that's just another one. And a third one that I'm potentially looking at in the value sector will be Dollar Tree. Keep in mind, guys, that they may get some plays from Dollar General here, okay? Dollar General has earnings on Thursday, so be cautious with it. But Dollar Tree, in my opinion, representing a good opportunity here down in the 134 range. I'm going to pull it up real quick for you guys. So Dollar Tree right here on the options chain, we are looking at 134 for this Friday, paying about 40 cents, you know, at the midpoint, 39, 38 cents, let's call it, right? So decent for the week. But if you go into next week, you will see that in the 135 range, that's where you're finding between the 132 and 135, paying 0.5% for almost a full week, which is very, very decent value on something that doesn't move a lot. And as you can see, guys, I'm targeting a very, very solid area of support here running through to the past year. So those are just a few of my value plays that I've been eyeing out, guys, as I feel that value has been getting hit, you know, as technology runs. And if we do have a balance come back to the market, I do believe that these names will do well because they're very profitable companies. They're recession-proof companies for the most part. And I think they've just gotten unfairly hit. So, bit of a long one today. If you liked the video, consider liking, consider subscribing. I'll catch you in the next one. And I love you guys. Happy trading.